We're less than 3 weeks away from the tax deadline. Are you panicking? If you have a friendly CPA besides you, all I have to say is relax. A lot of us will be filing tax extensions, but are you one of them? Speaking of the tax extension, let's hear all about Tax Relief Extension Act of 2015 from our tax guru, CPA Adil Baloch. Mr. Adil Baloch is the founder and chief CPA at Accurate Records and Tax Services, located in Montgomery Village, Maryland. Attorney Ramesh Khurana is the moderator here on this set.
Mr. Baloch, welcome to our studio.
Thank you very much.
I am Ramesh Khurana. I am an attorney at law and I have my office in Gaithersburg, Maryland. Now today I am going to ask Mr. Baloch some questions about the Tax Relief Act of 2015, which was passed recently. Mr. Baloch, I am sure that you have full grasp over this act. Now please tell us what was the purpose of this act and what does it mean to all of us?
It's actually, it means quite a bit to all of us, depending on who you are and what you do.
I know it's a very broad question.
It's a broad question,
question.
I'll try it and do
Just
my best
squeeze
to
it
cover
as much as you
as
can.
much as I can. So at the very basic level, the Tax Relief Extension Act of 2015, what it does is it extends the some of the expiring tax provisions that were due to have expired at the end of the year 2015. It's a temporary extension. It only takes you through 2016, so it will need to be addressed once again at some point. Hopefully this year being the election year, I'm hoping that it gets addressed. But in any case, it's temporary. Having said that, it amends certain laws. It extends certain laws, laws that had expired and laws that were expiring. It brought pretty much back everything that was in place prior to this.
So that's a good news.
It's good news from many perspectives.
At least for 1 year.
Exactly, at
Yeah.
least for 1 year. It affects individuals. It affects pretty much everybody that files taxes.
And I understand some of these provisions had even expired in 2014.
Correct.
So these
That's
have
right.
always also been extended up to December
Absolutely.
2016. So that's a good news.
It's a good news. It's basically the idea is to give people some relief so they can save some money, especially businesses. The big one, obviously, as I look at it, because over the years I have seen what the special bonus depreciation and another bonus depreciation called Section 179. I have seen myself how that has benefited some small businesses to be able to invest the money back into the business, because they gave you that benefit of, if you put this money back into the business, grow the assets of the business, you are going to be saving a whole bunch of money on taxes by taking accelerated or bonus depreciations and so on and so forth.
So can you
all
please
that-
explain what is Section 179?
So Section 179, basically, that's a small business bonus depreciation based on which you can actually go up to a significant amount of depreciation. Otherwise, as you know, in most cases, your depreciation is based on the useful life of the asset as provided by the tax code. Bonus depreciation outside of Section 179 let you take up to 50% of the value of the asset in the first year that you purchase.
So that saves you on taxes.
Exactly. Section 179 actually lets you go up to $500,000, which is a significant amount for a small business to be able to take taxes off. $500,000 saves you $150,000 potentially from a tax perspective.
That's very true. And it's a significant amount of savings.
Exactly. Now, granted, it's only available at the federal level. State level, you still have limitations depending on which state you are in. But the benefit that you get from the deduction at the federal level far exceeds what you lose at the state level. So
But state tax rate is anyway
exactly
very low.
You're right, absolutely
Yeah.
right. So it's basically, as I said, it basically extended all the allowances that were expiring at the end of 2015. And as you said, it actually brought back certain allowances from 2014 that had expired. It brought those back and it let people use it for another year, which is, again, it's a very good news. Once again, it's as I said, and as we always say, I think you say it more than I do. If you have access to a good, competent professional who knows these laws, who understands what has been extended and how to treat. Let's say you have the Section 179 available to you. You may not necessarily have to use all of it. You take it once, you can always extend it into the future years. It's an election that you make. Once you elect it, you can always save it for future years so that you can strategize it. It's, even though it's an extension up until the end of last year, you can actually use it to your benefit by making the election at that point and then deferring some of it in the future years and so on and so forth. So as I said, the benefits could be significant and they could be long-term. They could possibly go beyond December 31st, 2015. All you have to do is just do a good job of putting the right strategy in place for your business. And if you're an individual, I'm sure we'll be talking about this at some point.
Let's talk about that. So when we are talking about tax extensions, now let's be focused on individuals. So what are the tax extensions for the individuals, if you can tell us just a few ones?
I'll just cover a few examples. Like, I mean, there was a deduction where employer provided mass transit that was always in place. That actually has been extended, and it has been, and I read that, and it just brought a smile to my face when I read that. Mass transit has been extended, but then they have also added, if you ride a bike to work, they have actually added to that now. So, healthy living is being encouraged.
That's
even
true.
in the tax code. Obviously, it's granted these amounts are not very significant, but as you know, in the public school system in this country, if a teacher spends something, the tax code actually provides encouragement by giving them a deduction for the amount that they use in educational activities in the school for their students. That has been extended, so the teachers have access to that. Primary mortgage insurance, even though it's subject to a threshold, it's phased out after a certain AGI. That has been extended. So if your mortgage is more than the value of your house, or said another way, if your mortgage is beyond a certain threshold based on the value of the house, and the lender, it requires you to pay an insurance to cover for that gap, that PMI, it's called PMI, primary mortgage insurance, that has been extended. You can actually take that deduction at least through this year as well. So these are some of the benefits that have not expired, that have brought back into place, and they are available to people. So all this does is it actually adds more money to your bottom line.
That's true.
It puts the money back into the hands of people, which eventually comes back into the economy. And so it's a good thing.
And you and I are also the beneficiaries of these extensions.
Exactly, absolutely
Yeah, sure.
right, yes.
Now let's talk about these extensions for the businesses.
As we said, the first and foremost, the biggest one is depreciation, wherein acquire assets which actually boost your balance sheet on one hand, but then it gives you a pretty significant, tax benefit at the income statement level and taxes, of course. There are credits or deductions available to businesses that were going to expire, like the work opportunity credit. Somebody who has been unemployed for a longer term, it was encouraged to hire those people. You hire those people, I'll give you credit for certain payroll taxes that you paid for those people. That has been extended, which is, I think, it not only encourages employment, but it also puts a whole bunch of money back into the people's hand, into businesses, who can actually take that back and invest it back into the business. So overall, it is a good thing. Other ones are people who actually, it gets a little technical at that point, but people who understand these things. So leasehold improvements, if you lease a space and then you make certain improvements to that property, even though it's not yours, they let you depreciate those improvements over the course based on the formula of useful life, or over the time of the lease that you have for that place. What had happened was as leasehold improvements were actually subject to acceleration as well, you could actually take an accelerated deduction on those leasehold improvements as depreciation.
What about 50% during the first year?
That qualifies for that one, so you can actually take that. The assets, they're certain, pretty much. So I would say if it's an asset, I'm trying to generalize it. If it's an asset that is used in normal course of business and falls under a certain normal categories, would be subject to 50%. There's very few exceptions there. Most of it you can actually take off and take that depreciation.
So I think the example could be if you buy some computers for your office.
There you go.
So you can take depreciation.
So
up
you
to-
can actually take 50% of certain assets, one section 179 on the others, and regular and some others. So not only you're taking the benefit this year, but you're extending it to possibly to the life of the asset.
So you are reducing your tax liability by reducing your income.
Correct.
And increasing your
Your
cash
assets,
available.
exactly. Your cash
Wonderful,
available is
wonderful.
being increased. Your balance sheet looks a whole lot strong now because you have your asset intensive now, and so all these things are good. It's just that, as I said, you have to strategize it. You may not need certain assets. You may, who knows, your business model, you might be better off just by paying taxes. Who knows?
Right.
So you'd really have
Okay,
to
great.
look at these things.
Now, we had talked about tax extensions for individuals and businesses. Now, are there any other extensions which we have not talked about?
Absolutely. So
Yeah, can you please explain those?
yes.
I know that it's not possible to explain
So now
all of them.
these ones that could go either way for individuals and businesses, these are energy credits that were going to expire.
So those are given to the individuals as well as to
As
the businesses.
So,
Okay.
I mean, building improvement, make a building energy efficient. Businesses qualify for that. Individuals qualify for that. You change the front door of your house to make it more energy efficient. You could possibly qualify for a credit on that one. Windows that had gone away, you can actually bring that back. Fuel cells, the solar panels, those things, they were going to expire. They have all been brought back, and they are available. Well, actually, I shouldn't say they are available. They were available as of December 31st, 2015, provided the law does not get extended. If it gets extended, then they might be available through the end of 2016 as well.
Wonderful. Now, Mr. Baloch, we did talk about these extensions for the individuals, corporates, and some other extensions. Now, we are just left with 2 minutes. Now, as a final word, how would you like to sum up these tax extensions?
I would say, especially to the business owners, there is a tremendous opportunity with the unemployment going down, with the economy on the uptick. There was a tremendous opportunity to utilize these extensions to their benefit. Would have given a good opportunity to actually boost the investment back into the business, which in some cases could still be possible. They should go back. March 15th is the deadline to file corporations. If it's a partnership, you have until April 15th. There might still be time to go back and look at certain things and see if there's something that can still be done.
But I know that you, of course, know it. The downside of these tax extension is that our deficit is going to be increased by $97 billion over a period of next 5 years, which is a lot, which is, of course, is an area of concern for all of us.
Correct, that's right.
Yeah, great. But anyway, good to have these extensions and tax relief. All of us have saved money, and more money has come to our pockets, or we have been able to retain more money for spending and improving the economy.
Sure.
So good for everybody. So I would like to thank you very much, Mr.
welcome.
Baloch, for coming to our studios, and we will have you next week.
Thank you very much.
And we
for
will ask
having
you
me
more
over.
questions. Thank you
Appreciate
so
it.
much for being with us.